Hi everyone. We're going to talk about the FASB here. There's been a ton of recent developments over the past year. I would personally say the FASB is leading the way with regulatory clarity in providing guidance in how to move forward and how to move forward consistently. We're here with Alicia Manders, Assistant Director from the FASB. She's been there close to 20 years. Steve McKinney, Managing Director at Deloitte. Also spent a 2-year fellowship at the FASB. And also Bennett Moore, Director, Leader Blockchain and Digital Asset, COE. Wanted to talk about the FASB a little bit and give a bit of a behind-the-scenes view into everything going on. So, Alicia, if you can just provide a little feedback into what does the digital asset team look like? What are you guys doing every day? And more importantly, like what happened between June 6th when they asked for comment letters to September 6th when they just came out with their near final guidance?
Sure, happy to do that and happy to be here. Like many on the first panel, I started my career in public accounting, but because I enjoyed debating in college, I took a different avenue. So for me, even though I'm an accountant, words matter a lot more than numbers in some cases. So just to give you a little bit of a picture of what the FASB is like, it's a relatively small organization. We have a technical staff of about 80 staff members that work on different projects. As you can see, if you have everyone on the website, in terms of the variety of questions that we answer, or the areas that we look to improve guidance, there's sometimes very large projects like revenue recognition. I'm sure many of you are familiar with that guidance, lease accounting, and other areas. The staff itself is organized in project teams, so often we have project teams working on more than one project. For the crypto team itself, it's 6 people. So it's led by a gentleman who I work with, Nick Cappiello, who's been at the FASB for a long time. We have practice fellows like Steve McKinney or others that come in and work with us on a 2-year rotation. And then we also have a post-technical grad program where students that just finished their accounting degrees come and stay with us for a year and become part of these teams. So to give you a picture of what we did between June and September, it was really a lot of work related to the work that you provided us. So a big part of our process, because we're such a small organization, is having an ability and an interest in hearing from others outside of our organization on what we're proposing and how it affects you. Both from an investor perspective in terms of is what we're proposing directionally consistent with what they're looking for new information, as well as from a cost perspective. So understanding from companies that are going to be implementing those changes, what are the costs that they're incurring, the nature of those costs, the system changes and whatnot. And I know a lot went into the auditing discussion last time. So walking through the comment letters that we've received, and we also do a lot of outreach calls as well. We're not just closed to comment letters. The comment letters that we received were about 80 comment letters, about this thick. But it's not the thickness, it's the content that was within those comment letters that we as an organization appreciate and value. So we spent a lot of time reading each comment letter, going through and looking at the various aspects in terms of the scope of what we proposed, the measurement being fair value, the disclosures, the new package that we proposed, as well as thinking about transition and effective date. Ultimately, as a staff, we make a recommendation to the board, but we're not the bosses in the building. The bosses are the board. So when the staff makes a recommendation, it really has no external holding outside of our organization. And I should have started this by mentioning that my comments here are my own and don't represent official positions because I have no official standing in the organization. The board, unlike many of the staff who are accountants, is a mixed board. So it's 7 members. Some of those members come from industry. Some of those members were former auditors or formerly with the SEC. And some of those members, importantly, are investors or former investors and provide that perspective in making their decisions. The decisions themselves drive changes to GAAP. So it requires a majority vote in order for things to get passed and put into a slate where it would be approved as a final standard. So you saw the decisions that were reached in September. Ultimately, those will go into a final document that's balloted. And once it's balloted, then the changes go into making the change into GAAP.
Thank you. And what's the approach in making sure that all all comments are heard. Like, is it more consensus in saying that we've heard 20 out of 30 comments, and therefore we're going to move forward with supporting that because consensus has supported that from the public feedback? Or is there more internal discussions that happen after that?
That's a great question, Jeff, and that one's one that comes up quite commonly. We're not a voting it's not a voting process. So the more comments that we get, unlike some organizations, it's a data point, but underneath that data point, what we really look at is the rationale, the information that's provided from a qualitative perspective, either in support or in against of certain alternatives. And there's a lot of debate and discussion about the points that are raised in the comments in addition to the quantitative aspects.
Great, thanks. Now, let's dive into the latest meeting. I follow every meeting personally.
Hey, Jeff.
Yeah, sorry.
Actually, I just want to add
Steven,
a little bit on the FASB. So first, I guess, Alicia, thanks for reminding me of that disclaimer. So obviously the views that I expressed today are my own. They don't represent the firm, yada, 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 right? But I think one of the things, like especially the last question you just mentioned around staff members, like receiving feedback, comments, et cetera. When I was there and I was working on a different project, so not this project, but oftentimes we would receive a ton of feedback through comment letters, phone calls, emails, et cetera. And what we would normally do at the FASB was you'd have to compile all of that. It wasn't like you would just look at them and say, well, 70% said we agree, and that's the only thing that you would represent to the board. You'd actually say, well, 70% of the consensus said this, and then here are all the other things that have been mentioned. And so from that perspective, at least the board's able to see and hear all of the different feedback that's received, positive and negative. Certainly when you see a consensus, that actually helps drive decisions. But at the end of the day, like it gets back to kind of what's the rationale, what's the concept? Is it really just people kind of belly aching over a comment or a concept? Or was there real thought behind what the board decided on and what could change in the industry, what could change in the profession? And so they do look at it kind of from a full picture and don't just kind of gravitate towards that one overall consensus. So it certainly isn't a voting process in terms of gathering feedback. You'd often kind of list out all of the different types of feedback. And to be candid, I mean, I think a lot of these, especially like even in this area, a lot of the feedback would be a consensus. You'd start to see kind of just the same thoughts coming across from various constituents. Like certainly auditors are going to have their own views about this particular area, but then preparers will talk about it this way, and you'll start to see things coalesce around the same concept. But certainly the staff is just there to kind of present all feedback in a summary form, but they're certainly not filtering at all. So I just wanted to mention that.
And then once the board decides to vote, now I've seen that they could either move forward and vote or stay silent. Is there any other options that the board has when proposing to vote?
So when they vote at a meeting, it's a little bit different than voting on a document. So voting at a meeting is a leaning that they support the decisions that are reached. Those are published as tentative decisions, but the ultimate vote is really on the document itself.
And what does it mean if they choose to stay silent on a topic?
So that's counted as an abstention, and you need at least a majority.
Okay. And that brings me to fees. I thought it was really interesting within the meeting where they decided to expense fees as incurred, and then I'd say 20 minutes towards the end of the meeting, they readdressed fees and decided to stay silent. Any thoughts why they decided to do this?
Yeah, first of all, I'm really glad that they decided to do that, and part of it was as we progressed through the meeting, you kind of revert and you go, well, in hindsight, let me go back and think about that earlier decision. So I think that shows the fluidity of the board in terms of it's not all preset in stone. We have discussions with board members before the meeting, but they're making the decisions at the meeting themselves. Looking at the comments on transaction costs specifically, the feedback on that was somewhat mixed. I think that we heard rationale about the utility of the information under either approach from an investment perspective. We also heard some feedback in the comment letters about the difficulty of obtaining information, for example, some broker statements or otherwise. Fundamentally, from a staff perspective, we looked at the transaction fee as a wash in the first period issue. So in other words, if you were to recognize the transaction fees as an expense, or if you're to include them in the amount that you capitalize in the first period, once you remeasure, that expense is going to wash out in the first period. So because it's that sort of transitory notion, that formed our thinking. Secondly, there is industry guidance in certain areas that requires capitalization, for example, in investment companies. And even going into the exposure draft, board members sort of had different views about whether that should be consistent or not consistent with what investment companies are doing. And thirdly, I'd note that there are other areas where the GAAP is silent on certain aspects. So, for example, on the equity securities, GAAP doesn't prescribe whether you include cost or not unless you're in that specialized industry guidance. And so I think there was a comfort level there. Once we got to the meeting and we were talking about presentation and disclosure, I think that kind of caused some rethinking about, well, let's go back and revisit that expense aspect just to make it easier to apply and to allow companies to have the flexibility to have a policy.
Yeah, and just to chime in here a bit too, I think it's really important that you guys actually remain silent on this item too, because I think, using the term fees in a generic way might not be properly capturing all the different ways in which fees can be present in the blockchain digital asset space. I think there's plenty of situations where, for instance, a business who is paying for gas fees or transaction fees on behalf of customers as associated with a new product, that capitalization can make a lot more expense than expensing as incurred. So I think it's important that that was left as silent, as it leaves flexibility for everybody in the industry to apply what's appropriate for them within GAAP, of course.
Thank you. And the next topic from the meeting I also found interesting was wrap tokens and the exclusion of wrap tokens. Now I get the need for the narrow scope and moving this forward quickly. I personally think it complicates things a bit further than it needs to. Just wanted to get your thoughts on excluding wrap tokens, if you agree with it, and your thoughts moving forward.
Yeah, I'll chime in here first. I think I respect FASB's decision to, choose to exclude wrap tokens and a variety of other things, as I understand that, the focus of this particular ASU is getting it out the door, making sure that everybody can have this in their hands and, look forward toward an early adoption, which maybe you can chime in on briefly too, quickly. And so I respect that adding in components like wrap tokens and a number of other types of, digital asset tokens can complicate that, as it requires a lot more research. But I do think it is an important area still to be considered as we look forward toward this space. So I guess any further thoughts to the wrap token side?
Sure, and Ed, you want to go first?
Yeah, could I? So I do agree that certainly wrap tokens are going to be a big issue, or an issue that maybe should be addressed. But to your point, actually to both of your points, right? And it was actually said at the board meeting too. Part of their overall objective was to get something out very quickly that would solve a lot of ills. It wasn't going to take care of everything. And certainly wrap tokens is one of those that just falls out. A lot of that was maybe, it could have been because there's just more to do. We need to know more about what a wrap token is. What does it represent to you versus you to you? And so I think I'm speculating, but I think it was a level of comfort that said, look, we have a document. People have supported it. We've received a lot of positive feedback, maybe with the exception of just the overall scope of the model. So why don't we get that out and make sure that we can actually provide what investors and preparers really wanted, which was to fair value a lot of the assets in the scope of the model. And so I realize that there might be some opportunities out there to kind of continue to work and put together standard setting on wrap tokens and maybe other tokens. But in general, I think the basis or the rationale that the board and the board members actually talked about at the last board meeting was they wanted to get what they had out as quickly as possible. And so they didn't want to really deter any of that movement. So.
Thanks. And the only thing that I'd add right there is this was a vexing issue to me because my experience in the crypto space, unlike all of you in the room here, started at a high level maybe 5 years ago, but I'm not a crypto expert. And I think this issue is one that really kind of demonstrates that need for continuous growth of knowledge in this area from others in the space. I know even during the comment period, we learned more about wrap tokens than we did once we released the exposure draft in terms of how they're wrapped, what they might look like. And so, certainly the getting the document out was top of mind, but there were also concerns that expanding the scope beyond the crypto assets that are that the board originally concluded to those assets that derive the value off of other underlying assets could have consequences that we didn't fully consider. And so I think there was a hesitancy there. But with that said, I would also like to share that we continue to monitor this space. And so to the extent that these transactions become increasingly prevalent, that there's continuing difficulty and challenges in applying the existing guidance, given that there is existing guidance for these transactions, we're open to hearing that input.
Yeah, I mean, I found the meeting really interesting around wrap tokens because I think it sparked the most debate. I think it was like 20% of the overall meeting. I think we had 3 of the 5 or 7 board members supporting, including. So it was close, and I thought that was a really interesting part of the meeting just because of the debate that actually happened. Because usually you see them supporting unanimously. It's rare. Not rare, but it's less common to see them really debate and have contradicting views in how to move forward. So, last thoughts. They gave some insights into when this could be applicable. I think December 15th, 2024, if your year ends after that. But there's also the chance for early adoption. Any insights you could give on when you think early adoption would actually be effective?
Sure, and this is certainly our plan. We heard loud and clear in the comment letter process that companies want to early adopt now. That said, I know that the former panel focused on controls and auditing, so I would say that it's a challenge in terms of making sure that you're ready to adopt before going through that process. Our plan is to publish a final standard at the end of the fourth quarter. That's our plan. It could be first quarter of next year, but our plan is to publish fourth quarter. If we publish fourth quarter for companies that have calendar year ends, I think the expectation and hope from some outside of the building is that you would be able to adopt it for 1/1 of 2024 going forward. It does need to be adopted as of the beginning of an annual period because of the messiness that's created in your quarters if you don't adopt it for the beginning of the period. We have included provisions in the proposal that it would be for financial statements that have not yet been issued. So even if it is issued in first quarter for the final standard and your statements have not been issued, you still would have the option to early adopt.
Excellent, thank you. Now let's move on to transition, going from cost to fair value. This one's for Bennett and Stephen. Working more closely with the companies themselves, what are some of the biggest challenges you think companies are going to face in making sure they transition properly and have all the checks and balances where there are no gaps in the financial reporting and the change of that?
Yeah, so I can kick off here, Stephen. So, I think one of the most important areas, which I think has been discussed already on a few panels up here, is that, there is definitely a gap or, a continually evolving issue surrounding the ability to obtain data from blockchains and from platforms. They come in various different data formats. And, I know companies like Cryptio sponsoring this are doing a great job pushing us in the right direction and helping companies kind of capture that data in the most appropriate way. And, there are challenges with data that gets lost, especially on the indexing side. So, I think that is a particularly challenging area when we talk about the ability to apply the fair value side or the fair value guidance coming from this ASU. I think maybe some other areas to think about, from an application guidance standpoint that maybe the FASB might choose to work on further one day that could help with companies applying this guidance could be areas around, from a cost basis allocation standpoint, is it appropriate to apply FIFO, LIFO, weighted average cost? I think there's a balance there to consider where, FIFO may or may not be the most appropriate way, at least in terms of how GAAP looks at it today, but weighted average cost could be more expedient in helping companies that are less prepared with using softwares like Cryptio to actually get to the appropriate cost basis side for the disclosures coming from the ASU. You also have other areas around, the application of ASC 820 in terms of some application guidance there. I think it's modestly straightforward for when you think about, the larger cap tokens like Bitcoin or Ethereum where they're liquid and listed on many, many exchanges. But there are definitely still a variety of cryptos that, fall into what the new ASU has defined that don't actually trade on large crypto exchanges here in the US and might only trade within DeFi. And I think that kind of crypto to crypto pricing in terms of that guidance with applying ASC 820 could be particularly useful. So that's kind of 3 thoughts from my end. I guess, Stephen, anything to add to that?
No, just to add on at the very end, 820 or the fair value measurement guidance has been around for a long time. So it's not new, and so defaulting to that shouldn't be that difficult. But it's going to be difficult in situations, as you mentioned before, where you're not familiar with 820, you're not familiar with actually fair valuing certain assets, and sometimes in situations where there aren't readily determinable fair values. So it's going to be difficult to understand that. And so transitioning into a standard or adopting a standard in which you are now all of a sudden measuring using fair values is going to be a challenge in certain circumstances. So it's just like any other adoption of a standard that has a kind of a fair value measurement application to it. It's going to be challenging in certain situations.
If I could just add to that, one thing that was very encouraging that we did here in the comment letter process is that the instruments that are within the tokens that are within the scope are already being looked at from a fair value perspective, not necessarily with the same rigor, but for impairment testing as well. So that's something that I know it was sort of that continuous notion where you'd have to do it throughout the period, but I think in moving to the requirements, rather than that sort of look throughout the period, you're moving from periodic measurement, whether you're reporting at quarter ends or annual year ends. So the number of times that you're looking to do those valuations should be decreasing.
That's great. And on to the next topic. The FASB made it very clear that the scope was narrow. What are the things we'd like to see them address in near future meetings? Where do we need most clarity next?
I'll start off here again, just briefly, and then Stephen, you can go at it. I think I want to start with this question a little bit more broadly. I think, as we've discussed many times here, this space is rapidly evolving. And while it's been extremely impressive, the speed at which the FASB has moved on this particular ASU, I think there are a large number of other particular areas where guidance coming from assistance around applying existing accounting standards from entities like the AICPA is helpful, but there are gaps existing. Could really benefit from the idea of FASB looking into, or the potential idea of them being able to form some type of working group, because this space is constantly evolving. It's not really a one-hit wonder. It's not really a one-off. It doesn't really seem even like a phase 1, a phase 2, a phase 3. This feels like something that's going to continue to evolve and require the FASB to continually address these issues where there are gaps in applying existing accounting policy. These views are my own. I'm not speaking for the sake of RSM here, but I think it's something that I want to point out, or at least address, because this space is quite complex and there are so many different areas that it could take a very, very long time to kind of address each issue point by point. Just to bring up one other particular item I think that's really relevant from the side of FASB addressing, and I think we're seeing it with other regulators like the SEC attempting to address the concept of when crypto is actually an asset on the financial statements. So this ASU has been great for helping companies understand that when it is an asset, it can be fair valued under the intangible model. But I think we have somewhat of a gap in terms of the determination of when it's appropriate to have crypto as an asset on your financial statements. And kind of what I'm getting at here is, there could be questions as to if you're holding crypto on an exchange and this exchange is foreign, maybe has vague terms and conditions or no stock reports, is it appropriate to call that an asset, or is it more appropriate to call it a receivable? Same kind of questions I think exist for more nuanced areas like smart contracts in terms of, how FASB or how the accounting side might look at the control and title aspect. I know we've had some judiciary content from this with the Uniswap case that addressed that they view deposits into the Uniswap contracts as representing title, but maybe FASB or other regulatory bodies don't view it that same way. So I think that's another important area that would be really helpful to understand from an application guidance standpoint.
Yeah, so the only other thing I would add to that is, from the beginning, I think one of the areas that we often heard about was NFTs, and that was outside of the scope of the ASU. Now, to Bennett's point, if we were to say NFTs are clearly missing from the scope, and so we should focus on that, maybe in addition to wrap tokens, et cetera, because the space is evolving so much, maybe NFTs aren't really going to be that important anymore. I don't know. I'm not suggesting that that's true. All I'm saying is that I do appreciate your point, which is this space continues to evolve so quickly. And so to sit here and say, well, the next thing we should do is solve for NFTs, and then we're 65% of the way there. I don't know, maybe that's not the right way to think about it. So I do appreciate that view. Because I think easily, like if you asked me that question before you answered it, I would have said, well, we should probably think about NFTs and wrap tokens. But maybe that's another way to think about it, which is, think about a way to kind of just capture, things are changing so quickly, what can we do to make this whole journey a little bit easier? I don't know.
And maybe just one quick thing before you also add. I just want to add to kind of your point about the wrap token side in terms of, how I think about the FASB's role or entities like the ICPA's role. Like, I respect that the FASB is designed to be establishing rules, policy that is meant to last a figurative lifetime, right? It's meant to be concrete, whereas the ICPA might be meant to be addressing new circumstances and issues in terms of how you apply that existing policy from the FASB. And I respect that, things like wrap tokens, maybe part of that discussion you guys had was that maybe you're not sure that wrap tokens are going to be around for their lifetime. Maybe there will be other technological advances in blockchain that change the need or change the perception of what we would define wrap token as today. Right, and I think that kind of leans a little bit harder too into that working group concept, as it allows that continual research to occur and support where are these policy changes that feel like they can last a lifetime in this space.
Yeah, and I appreciate that part about change, because I have seen how rapidly there has been evolution in this area. One of the challenges with standard setting is that when we look at an issue, before we add something to the agenda, there's really three things that we look for. How pervasive is it in terms of a gap reporting issue? Can we identify what the problem is, and can we identify solutions that can be executed in a way that justify the costs that would be incurred for the change? So those are our basic criteria. Certainly the AICPA working group has done a lot of work in this space in terms of providing some additional information for people to consider. But being a new industry in this space, I think, provides a great opportunity for all of the minds in this room to work together to see what solutions you think make sense, and to circulate and percolate up over time the issues that you think should be addressed at that higher level. Because once we set something in a standard, it usually stays there for a long time. So we're happy to address any issues that come up, but I really encourage all of you to work together as well as an industry, in the strength coming from your industry, collaboratively. See it in other industries as well that have been around for a long time, and I'm excited about hearing about potential opportunities for us to work together in the future.
Yeah, and just keep in mind, like if I think about, like if I take a step back and think about kind of the journey on this ASU or the final standard that's going to come out, I mean, it was very, very quick. The feedback that the FASB received in terms of kind of investor needs, preparer needs, and then adding it to the agenda, I don't know, it was maybe like a little over a year, or well, maybe by the end of this year, it'll be a little over a year from like the first board meeting to the end of a final standard being issued. And that's incredibly quick. And so even though we're up here kind of talking about some of the other wants and needs that we want, down the road, if we think about what they've actually achieved over 12 to 15 months, it really is impressive. And so I think it's easy for us to kind of poke holes and think about all the things that they didn't do. But if we take a step back and think about what they've actually accomplished, it's really, really remarkable. So.
Thanks. One aspect that I mentioned to your point is that I think a board member, and I've been at the FASB for about 20 years, and I've never seen anything like this in terms of this nature of project, but there was a board member that put it in words that I thought were very good, and that is, this project has been a unicorn for us in a lot of ways, in that it had very strong investor support for the changes that we were making, and it also had very strong support from the crypto community in general, for those that are preparing financial statements, those that are auditing them, to go forward with the change, deliver the changes in recognition, but also the packages of disclosures that would provide additional transparent information. We don't find that very often across other projects that we work on, and so that was easier to execute because of the support from the community.
Well, thanks everyone. That was a really insightful panel.
Hi, I'm Palash from OP Labs. I'm curious about if and how you guys plan to kind of expand the scope in thinking about token issuers for the purposes of the fair value reporting.
I can address that one. So token issuers was certainly raised during the comment period, and while we appreciate some of the aspects of, from an issuer's perspective on the accounting results, the complexity of addressing that issue we couldn't do in the short term. So certainly we've heard those issues. We open to them in the future, but at this point there are no plans to add that to the agenda.
Well, thanks everyone. Next up is Mackenzie from Hash Basis.